ESPN scoring a $1.5 billion deal with Penn Entertainment to rebrand Barstool Sportsbook as ESPN Bet. In addition to the cash, ESPN will also receive warrants to buy $500 million in shares of Penn, which will sell its stake in Sportsbook back to founder Dave Portnoy. The move marks a pivot for ESPN parent company Disney, which has been reluctant to enter the sports betting business due to its family-oriented brand. As part of the deal, the app will be promoted on ESPN's platforms and will have access to the network's talent. For more, let's bring in Jessica Reif Ehrlich, the senior U.S. media and entertainment analyst at Bank of America Securities. And, of course, we'll hear a lot more about this, Jessica, on Disney's conference call, I'm sure, when it reports after the bell today. But I'm wondering, what do you think? How does this help Disney?
I mean, for Disney, ESPN has a great brand name. It's maybe the best name in sports in the U.S. And maybe globally. So it's a way to leverage that name. Disney's talked in the past about, the concern was, would they damage their brand? And many studies have shown, internal studies that they've talked about, it would not damage their brand. So it's a way to leverage ESPN with little financial risk to Disney, and none really, and participate in the upside.
I see. Okay. On the call today, Jessica, what are you expecting from Disney? What do you want to hear from Bob Iger at this point?
There is a lot going on at Disney,
yeah,
and a lot that came out from that CNBC interview that he did a couple of weeks ago. And so I think a lot of the focus will be on the company's focus strategically, what their priorities are, their plan of attack, what assets they'll keep, what assets will be divested. There's just more than normal noise surrounding Disney at the moment, and of course they also have the call tonight, and then an analyst meeting in September, a multi-day analyst meeting. So I think they will share their strategic priorities.
What do you want to hear?
Look, I think we've seen Disney's the last company in media to report. So we know kind of the underlying trends in advertising and theme parks, in content, et cetera. But I think it's very important to hear the plan from Bob Iger in terms of what they will do with their linear business, what they will do ultimately with ESPN. They've talked about bringing in strategic partners. We'll see what that means. I mean, there are ways to strengthen ESPN, and we will see. Look, if you step back, Disney has an incredible collection of well-known branded assets. They have incredible IP. And they're just going through an unusually difficult time, meaning there are secular challenges, there are cyclical challenges. Our subjective view is that Bob Iger is an incredible manager and will lead the company through it. But there are many, many steps that will have to be taken. So we want to really hear from him how he plans to just leverage Disney's assets and get them back on a growth path.
What do you think of Disney's valuation at this point? I mean, a lot of Disney's woes seem to be factored in, but maybe not. I mean, it's trading at levels, at the depths of the pandemic, it didn't trade this low, Jessica. So what do you make of the stock?
Exactly. Look, the stock has not been this low in a long time, and on a relative valuation, I don't think it's been this low in I don't even know how long, like decades maybe. So there's a lot of the risk has been taken out of the stock. A lot of things can go right. At the moment, it appears incredibly challenged because a lot is unclear. Look, the market hates uncertainty. And as the company kind of deals with each one of the issues facing it, we think that there's a lot of upside. Certainly they have a lot of assets and brands. It does seem that Bob Iger is completely aware, and he's the one who kind of highlighted what their issues are. And it's reminiscent of what he did, many years ago when he said ESPN is challenged because the pay TV universe is declining. So, at these levels, there does not seem to be a lot of risk in Disney stock.
Jessica, in terms of the linear stuff, we were talking earlier in the hour, or maybe last hour, just about how, folks who work at ABC this morning or this afternoon are going to be listening to this call, trying to figure out, are they core? What does it mean to be core? if you start to think through the permutations of either selling or spinning off various forms of linear and the studios and other things that are providing the content to things like Hulu and other things, how does that work in your mind?
I mean, look, there were a lot of questions raised from the interview that Bob did. What does he mean about, what will he do? Look, the linear business is completely challenged. The pay TV universe, as you know, is declining, but it doesn't mean that these assets don't have value. So if you look at what viewers are watching on streaming, very often they're watching broadcast and cable network shows just on a different distribution platform. So it's unclear as of now what he means exactly by not owning these assets, or maybe not owning 100% of these assets, who the partners may be, what it would look like. It's just not clear. But there's tremendous value. When NBC, your parent company, took content off of Hulu and put it on Peacock, you could see where the subs went. They went to Peacock. So there is tremendous value in broadcast and cable content. And I think that if CNBC was on a different platform, people would follow you.